Hey, what's going on, my friends? In this video, we have another updated look at our $25 a week dividend portfolio. Yes, we contribute $25 a week into this portfolio where we started it with $100 way back when, but we'll get there. Let's see how things have gone over the past day. As you can see, our gain is up to $15.21 with a return of 0.87%. The past week, it jumps up to a return of 1.60%, and that's a $27 gain. And then 1 month, it jumps to 5.22% return, which is a $84 gain. And 1 quarter, we see a return of 3.67 and a gain of $56 in 1 year, as well as all time. You can see our return is 15.18% with a gain of $155.95, which gives us a current value. Yes, a total current value of $1,754.17. Now, this, my friends, is what I'm talking about. This is how you grow your money. It's not about the sprint. It's not about becoming an overnight sensation, a millionaire. You blow up on, Instagram or TikTok or something. Yeah, it could happen. It's possible. But realistically speaking, you got to think long term. You got to think having a plan. You got to think growing your money just like a plant. What do you do with the plant? Well, you got to find some good soil. You got to find a good seed, put the seed in. Then maybe you want to get some fertilizer. Maybe you got to kill some weeds. But you got to continue to take care of it. You got to make sure it's getting some sunlight. You got to make sure it's getting some water. And growing your money is no different, where we are just continuing to contribute $25 a week, even when things go down. You see the little slumps, or it kind of levels out and plateaus for a little bit. It's fine. Don't stop. You have to continue to invest. And that's why I like to show you guys this kind of, when you see it from 1 day, 1 week, 1 month, and so on. I always do that because you see a lot of red oftentimes, maybe at the beginning, where the past day or the past week, it might have been red. And then from there, things might have turned around and only gone up. But the point is, it's a long-term play, and you can really grow your money as well. Similar to what we're doing here, if you have a dividend portfolio as well, you can start with M1 Finance. I have a link down below where you can use my referral link. I think if you start and fund your account with $100, they'll give you a few free bucks, $30, $50. It varies from time to time, but either way, get started, my friends. The only way you can start to grow your money is by starting, right? I mean, first you got to make money, but then you got to start to actually create a portfolio. And when we look at our dividend portfolio and see how things are going, who's tearing it up, who's doing well, um, well, our dividend portfolio is a nice diversified mix. We have a few different REITs in here, real estate investment trusts, which are killing it as usual. Newt at the top with a return of 54.79%, followed by PepsiCo with a return of 30.65%. Then we have another REIT, which is Realty Income Corp, 24.22%. Then JP Morgan Chase, we can see 18.12%, followed by Coca-Cola, 16.52%. Procter & Gamble, 14.62%, and then IIPR, which is the newest REIT that we added into our portfolio that we changed out AT&T with, and they are up 14.29%. Then we have Johnson & Johnson, where we can see they are up 3.37%, and then in the red we have 3M, which we can see it's at 1.98%, and then Verizon Communications at 5, and that's a negative 1.98, and then Verizon is negative 5.43%. So our newest company that we added into the mix is continuing to demonstrate that was a good move so far. I'm happy about that move. I have no regrets, and I'm excited to see how well that continues to play out over the next year or 2, 3 years as cannabis, because this is a cannabis REIT company, a cannabis real estate company. So they focus on real estate, but specifically for the cannabis industry. I think that's a very unique niche market that will continue to take off. Real estate is real estate it can fluctuate, it can be very volatile, it can go up and down. That's why New Tech and Realty Income Corp, I like to stress it to you guys. If you add them to your portfolio, expect them to be volatile. Expect them, when things go bad, don't expect them to be tearing it up necessarily as well as they are. However, the reason why we have a company like that in our dividend portfolio is because you can still get dividends from them. And when we jump up here and see who has paid us the most dividends so far, you can see two. And remember, RP is the newest company that we added to our mix, so they're not going to show up in here. But the other REITs that we've had are in the top 3 right now. AT&T was up there before, but 2 of our 3 REITs, which again, the other one will probably be up here as well soon, but 2 of them are in the top 3 for who's paid us the most when it comes to dividends. So regardless of how the stock is performing, we're always going to get these earned dividends from these companies. And that's the power, that's the benefit of a portfolio like this. You will get earned dividends regardless of how well the market gain component is, how well the stock is doing. Now, of course, AT&T is going to be slashing their dividend payout, so you won't make as much. So you can see and experience things like that. And that's the beauty of a portfolio like this. It's very easy to change out a company for another company, which is exactly what we did with AT&T and IIPR. So yeah, I'm really glad with how things are continuing to go with this portfolio. Again, we started this with just $100 back on February 1st. And, we had that one other boost from March 5th that we added the $500 from our stimulus check. And aside from those 2 larger amounts, we've only had $25 a week coming into this portfolio. And as you can see, we're up 15%. We're up to $1,750, $1,750. Come on, my friends. Like, this is pretty good. And again, when you're seeing returns like 15%, if this was in a mutual savings, any kind of savings account, any kind of checking account, you won't see returns like this. So, at some point, you need that emergency savings. But once that is done, my friends, you want to consider investing and growing your money, getting your money to work for you. And this is one way you can do it. Not the only way. I'm not saying it's the fastest way, but it's clearly working so far. It's clearly effective, and it doesn't take much of you to do this because you're already making your money. That $25 might have been something you spent towards takeout food or towards, going to the bar. Reduce those other expenses, a few times a week, a few times a month, and start to invest in your future. This is how you do it. So I hope you guys found this video helpful, motivational, encouraging as you continue or start to invest and grow your money. And like I said, yes, things can be volatile. Things might go down. You might experience more red than what we have. And I expect that to happen. And when it does, I look at it like a great opportunity to keep buying, and maybe we'll contribute a little bit more money because, hey, our stocks are on sale and we want to get them when they're on sale. So don't be discouraged, my friends. Just keep with it, keep at it. It's like a marathon, not a sprint. And what we gonna get there. We gonna get there. And by there, I mean make it to that financial freedom place that we're all striving for, because that's what it's all about, the financial independence journey as we strive for financial freedom. And on that note, my friends, if you haven't yet liked this video, it does help with the YouTube algorithm. It also shows me you guys appreciate the time and energy going into these videos. And after that, subscribe to the channel, hit that notification bell so you can stay up to date on all of our latest and upcoming videos, including my next video, which will be our new growth portfolio. Yes, we started a brand new growth portfolio where, I added only $100 to 7 different companies, and we are already up big. You definitely want to stick around and check out that newest video to see how things are going after the last week's, huge, crazy returns. Because hey, it's a growth portfolio, not a dividend portfolio, and that could be even more volatile than this portfolio. So things might get a little exciting over there. Definitely want to check it out. Like I said, if you haven't yet liked this video, subscribe to the channel, hit that notification bell. But you guys already know, really quickly, much appreciation for watching as well. All right, but you guys already know I got to keep it moving. But yeah, I'll see you in the next video. Peace.